Le criptovalute, essendo fondamentali per fornire autonomia finanziaria nel mondo, sta rendendo quest'ultimo sempre più digitale ed interconnesso. Le criptovalute madri come Bitcoin ed Ethereum sono il futuro del denaro, essendo decentralizzati e diversi dal solito sistema economico globale. Ci sono ormai 2 miliardi di investitori sparsi per il globo, molti di essi nemmeno posseggono dei servizi bancari normali, eppure svolgono una vita economica come le altre.
I've been very clear that one of the things that I've been running from in the traditional asset management world is index-based investing. So benchmarks, you've heard S&P 500, NASDAQ, Russell, MSCI. And I've watched our industry go through an arc, actually, ARC, not ARK. And in the early 80s, when I moved to New York, indexing and benchmarks weren't a thing. We were all investing in the future, trying to figure out how the world was going to work. And the 80s and 90s were very much like that. And then we got the tech and telecom bubble and bust. And that was the first, oh my gosh. And then 08, 09. And what happened during the last 20 years is we've had a move towards benchmark sensitivity or passive investing, outright just let me invest with the benchmarks, that's safety. And we actually think that is becoming a very dangerous way to invest, because if we're right about the amount of innovation that is evolving today, so we've centered our research and investing around 5 innovation platforms, genomic sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. And those are all converging. So it's becoming very disruptive to the traditional world order. And I think even though the onus or the burden of proof is on us, because passive has done so well over the past 20 years, it's been self-fulfilling as more and more assets moved into passive or benchmark sensitive. I think the pendulum has swung too far, and especially given how much innovation is evolving now, that is really going to destroy the way the world has worked and create a whole new world. We knew that too much capital was chasing too few opportunities. Too early. Many of the technologies were not even ready, the ones we were talking about. And so we were buying puts to serve as protection throughout, actually, late 99, throughout the 2000 period, as the market, as investors were buying the dips, we were buying puts. And in January of 2001, it was very early. It was probably the first week. We agreed to disagree, and that was the Fed eased. I didn't want to take the puts off. My partner did. This was really her family's fortune, and so off they went. And I just decided that all that work putting the puts on and then just having to let go, probably it wouldn't be a good place for me to stay. So we're seeing the down rounds, and personally, I like starting businesses and portfolios during down times. We're nascent, and so we can average into what I do believe could be a set of significant drawdowns in the private world that has already happened in the public world. Now, the fund that we have launched is a public-private crossover fund. So, I think we're at I also think, I want to make this clear, that the private markets have innovation more right in terms of valuation than the public markets do. Many of our stocks are down 80%. Some are down 90% from their peaks, which is just ridiculous. And I think that's because these stocks are not in benchmarks. And I just described how the traditional world in a risk-off period sells our stocks and moves back close to their benchmarks because they think that's where the safety resides. And maybe it does if everyone's pushing into them. But if we're right, fundamentals are going to disrupt that way of thinking during the next few years. And the key to long-term outperformance and risk control, if you are an asset allocator, is to diversify, diversify, diversify. So what should people do now that we are down? At our worst, we were down 79%. Good asset allocators, really good asset allocators will be buying our strategy, and they'll be selling some of the more index strategies that had held up so well.